Hello students, welcome back. This is Mrs. Mercado speaking. This is a lecture for Accounting 2401. This is Principles of Financial Accounting, and this lecture covers Chapter 7, which deals with internal control and cash. Okay, the textbook that we are using is Financial and Managerial Accounting, 15th edition. Now, once again, I know I start every lecture with the same thing, but it's just critical based on the feedback that I've been getting from students. They're confused. Reading is very important. Okay, you cannot skip the step of reading before you attempt your problems. Okay. Also, some students send me emails or messages, Miss, I don't understand this problem, when that problem has been covered in the lecture. So it's very important that first of all we read the chapter, we review the PowerPoints, we listen to the lecture, and then we go into Cengage and attempt the problems. That is the order that we should be doing the things, okay? You shouldn't be skipping any of those steps, because then, I get messages with items that could be addressed if those things were done in that order, or just be done in general, okay? So it is very important that you read the chapter and you utilize all of the other resources provided to help guide you while you're completing all of your assignments, okay? Mind you, I am here to help you, but you also need to do your part in reading, reviewing the PowerPoints, listening to the lecture that it takes me a while to put together, record, upload. So they are there to provide you supplemental information. So please just take advantage of those resources that I am providing you. Okay. Now this chapter deals with internal control and cash. In this particular chapter, we're going to be dealing with new accounts, such as cash short and over. What happens when you have a business and your cash is not tied to your cash receipts? Either you're short or you're over. What do you do with that shortage and overage? We also talk about setting up a petty cash account. Okay. Most small businesses have a petty cash account that we utilize for when we need to purchase small items or pay for certain things within the office that we don't want to wait until we write out a check. So we usually have a petty cash in our office. We talk about that as well. And then last but not least, we also talk about preparing a reconciliation, a cash reconciliation. Internal control procedures are discussed, having an effective control environment within the business. There's just a lot of information covered in the chapter that it is critical that we read it, okay? So, in this particular chapter, we discuss the 5 elements of internal control, which include the control environment, the risk assessment, the control procedures, monitoring, and information and communication. Okay? So it's important to know that the control environment is the overall attitude of management and employees about the importance of controls. Doing or conducting a risk assessment includes evaluating the various risks facing the business, including competitive threats, regulatory changes, and changes in economic factors. Then we have to implement control procedures to provide reasonable assurance that business goals will be achieved. We continue by monitoring the evaluation of the internal control system, and then information and communication provide management with adequate feedback about the internal control. Okay. There is no one element of the internal control procedure that is more important than the other element. All 5 elements are necessary for an effective internal control. Okay, so we need to be able to account for all of our, make sure that we have procedures in place to monitor and safeguard all of our assets, including cash. Okay. This allows us, having strong internal controls allow the reduction of the possibility of errors, as well as the embezzlement. Okay, sometimes employees get together and they figure out a way to steal from a company. Having strong internal controls ensures that does not happen. Okay. It's very important that the functions of operations and accounting need to be separated. The people receiving the money and the people accounting for the money should have separate functions. One employee should not be responsible for handling the cash receipts, which is the operations component, and maintaining the accounts receivable records, which is the accounting component. Okay, so just go over the chapter. A lot of information is provided. Now I'm going to jump into some of the exercises because this is what you're going to see in your homework. Remember, your quiz is over terminology. Your homework is application based. So you read the content in the chapter and then you apply what has been learned to actual real world scenarios, things that you would actually be doing if you were working in an accounting environment. Okay, so the first exercise that we have is exercise 712. Okay, so exercise 712 deals with entries for cash sales, cash short and over. Okay, so this particular problem is fairly short. It just says the actual cash received from cash sales were $83,452, and the amount indicated by the cash register total was $83,480. We are being asked to journalize the entry to record the cash receipts and the cash sales. Now, even though this is a short problem, a lot of students get confused with when they're over and when they're short. So that is what I'm taking the time to explain it to you. Okay, so I've set up here a little template with the cash received, the cash register, and then we're going to calculate the difference. And then once we have that, we'll feed that over to our journal. Okay, but this is just for us to see. Okay, now cash, it says the actual cash received from the cash sales was $83,452. This is how much cash you received from selling your goods. Okay, now we are comparing the cash that we received, the cash that we have in our register, to our cash register total. This is what our computer or our system tallied or picked up that we had sold for that specific period. Okay, that day or that week or whatever, however you account for your cash sales. So the system is saying that you should have $83,480 collected because that is what we recorded as our sales in our system. This is how much we actually recorded in our system that we had sold. So in our cash register, we said that we sold $83,480. Okay, so now we have to compare. This is what, according to our records, we sold. We sold $83,480, yet we only have $83,452 in our box. So let's see what the difference is. And I've been having issues with my computer all morning. Okay, so the difference is cash received minus my cash register total. So if the number comes out in minus, it means you are short, which we can tell we are short just by looking at the data. This number is smaller than that number. We are short $28. Okay, if you receive, if short, which would be a minus, okay, minus. If short, then you would need to debit. You would debit the cash short and over account. Okay. If over, maybe you collected too much, and this happens because you give out the wrong amount of change or whatever the case might be, then you credit the cash short and over account. So that is how it works. So if you're short, you debit the cash short and over. If you're over, you credit the cash short and over. So if you're short if the cash received is less than the cash register. You're over if your cash received is more than the cash register. So in this case, we are short. Okay, so we're going to start off by entering the transaction. Okay, so the first thing that we are going to enter is the cash that we received. How much cash did we get from our sales? Well, according to this, we received cash of $83,452. Okay, let me put commas. There we go. Okay, then I'm going to have a plug in the middle. That's going to be my cash short and over. Okay, so my cash short and over in this case is $28. Because I'm short, I am going to debit my cash short and over. Okay, debit. Now, if you notice here, it's in parentheses. That just lets me know that I'm short. When I'm entering my transactions in my journal, we never enter minus. All of our numbers are positive. What tells us if we're short or we're over is whether it be a debit or a credit. So I know that on my cash short and over account, if I have a debit, then that means I'm short. Okay. And then last but not least, I'm going to record my sales. How much did I sell during this period? Well, your sales are always going to equal your cash register amount of $83,480. Now, it's very important in accounting. Remember, we always need to make sure that our debits equal our credits, okay, which they do, okay. Just do a simple calculation in your calculator if you're using Excel. In Excel, just to make sure that the debits equal the credits. We don't want to be out of balance, okay. If you have multiple transactions, make sure that debits are equal the credits, okay. So that is our first exercise. Very straightforward. Exercise 712, okay. Now I'm going to copy this over to my next problem, okay. It's the same thing, okay. Now we're doing exercise 713, but now we are over instead of short, okay. So it says the actual cash received from cash sales was $315,280. So this is the amount of cash we received, $315,280, okay. The amount indicated by the cash register total was $315,150, okay. Journalize the entry to record the cash receipt and cash sales. So we're going to figure out our difference. Cash received minus our cash register. That gives me a positive 130. So that means if positive, then the credit cash, and if you're over, then it's going to be a positive number. Okay? So if it's positive, if it's a positive number, the difference between the cash received and the cash register, if it's positive, then that means you're over. And then that means we're going to credit the cash short and over account. Okay? So we're going to record that entry based on this information that we have. So how much cash did we receive from our sales? Well, we received $315,280. And let me put my commas here. Okay, very good. Then I'm going to have my plug, which is cash short and over. Okay, and I am over 130. If you're over, then we need to credit my cash short and over, and I am over by 130. Okay, and then this needs to be just indented a little bit. Okay, and then I'm going to record my sales. Okay, the sales are your cash register amount, $315,150. Once again, we need to make sure that our debits equal our credits, just to make sure that we are in balance. And we are. Debits equal credits, okay? So make sure that you add your debit column, your credit column, and make sure that those numbers are the same, which they are. So remember, the amount of the cash is the cash received. The amount of your sales will always be your cash register amount. What you need to figure out is your cash short and over, and that is done by getting your cash received minus your cash register to get the difference. Now, depending if the difference is a minus sign, if it's a minus sign, that means you're short, you debit cash short and over. If it's a positive sign like we have in this case, then we are over, and then we credit the cash short and over account. Okay, so that is the second exercise. Fairly straightforward. The third exercise that I'm going to go over deals with petty cash fund entries. Okay, so it says here, journalize the entries to record the following. The first entry, okay, and they should be 1 and 2, not A and B. Okay, let me make that correction. There we go. Okay, so our first entry, check number 12375 is issued to establish a petty cash fund for $500. So this is the first time that we are setting up a petty cash fund. This entry is only done once, okay, every time you establish a petty cash fund. After you establish it, then all you have to do every month is replenish it, okay? And then if you want to get rid of it, then you would do an entry to get rid of your petty cash at the very end. But when you establish a petty cash, we only do that entry once, okay? So it says that we're establishing a petty cash of $500. So we are opening up a new account called petty cash for $500. Now, petty cash is part of a cash account. Then it's an asset account, and the normal balance is a debit. Okay, so this should have been learned in chapter 2 when we learned our normal balances of the account. Petty cash is just like cash. Cash is an asset, and the normal balance is a debit. So I'm going to go ahead and I'm going to debit my petty cash $500. Well, where am I getting my money to establish my petty cash? Petty cash, remember, it's $500 that you have physically in cash in your business, okay? So if I have $500 in cash in my little drawer, where did that money come from? Well, that money came from the bank. You made a withdrawal of $500. So what's going to happen to your cash in the bank? It's going to go down. It's going to decrease. So every time cash decreases, you credit it. Okay? So that is the first transaction. That is establishing petty cash. Every time you establish petty cash, you debit your petty cash account and you credit cash. Now, transaction 2, it says the amount of cash in the petty cash fund is now $40. Okay? So we had $500. We used some of it up. Now we only have $40 remaining. So we have to replenish it. Okay? Check number 12476 is issued to replenish the fund based on the following summary of petty cash receipts. Okay? So we spent $212 on office supplies. We spent $156 on miscellaneous selling expense. We spent $61 on miscellaneous admin expense. Okay. Now it says here, because the amount of the check to replenish the fund plus the balance in the fund do not equal $500, we also have to identify and record the discrepancy in the cash short and over account. So we have a difference, okay? We do not account for the whole $460. So where am I getting $460 from? Okay, so our petty cash box started off with $500 and we have $40 remaining in the box. So that means that we should have receipts for $460. Okay, so I'm going to do a little calculation here. Okay, I'm going to start off with my cash on hand. How much cash do I have on my petty cash? I have $40. Okay. Now, it says here that you spend money on office supplies, which is perfectly normal. Office supplies, and you have receipts totaling to $212. You also spend money on miscellaneous selling expenses. So that was $156. And then we spend $61 on miscellaneous admin expenses. $61, okay? So what is the total that I have either on my petty cash or have spent? How much do I account for? So I'm going to underline here and I'm going to get my total right there. Okay. So I can account for $469. That's the cash I have on hand right now and the money that I spent during the month. Okay. My petty cash fund is $500. Okay, so I'm gonna get my $469 minus my $500. So that means I am short $31. Somehow I lost $31. Either I gave money to someone and they didn't bring me back a receipt. I don't know what happened, but I'm short $31. Okay, now that I know this, I can go ahead and I can do my journal entry. Remember, if you're short, which is the case right here, we're short $31. If we're short, we are going to debit our cash short and over account. Okay, so let's start replenishing this account. So I know where my money spent. Now I need to record these expenses in my books. I haven't recorded them yet. All I had was receipts in my box showing that I spent this money and these different things. Now I actually have to transfer that information from my little box into my actual accounting system. So I have to do a journal entry to record those entries. So I'm going to start off with office supplies. Okay, office supplies is going to be debited. Okay, and I like to call it, here they just call it office supplies, but I like to call it office supplies expense, okay? Because it is an expense to us. We spend money on office supplies. So I have office supplies expense of $212, okay? Then I have miscellaneous selling expenses of, so that was my $212. Then let me do another color, that way we don't get confused. So that's $212. Then I have miscellaneous selling expenses of $156, okay? $156, and we got this information from the problem. And then I have miscellaneous admin expenses, and we have $61. Okay, And then we also have that shortage that we identified. And if we're short, we need to debit cash short and over. So I'm going to have my cash short and over. Okay. And I'm going to debit it $31. Okay. So now the company is going to issue out a check to me or give me cash for the total of those transactions. For the office supplies, the selling expenses, the admin expenses, and that shortage. So they're going to give me back the total of those 4 transactions. So they're going to give me in cash $460. Okay. So that is how much cash I'm going to receive to replenish my petty cash box. Okay. So now with the $460 that I receive, $460 replenishment plus the $40 balance on my box, that's going to give me my $500 petty cash balance. Okay. So let's see what I did here. Okay. So I'm going to replenish my petty cash. So I'm going to receive $460 into my box. So I'm going to get that cash. I'm going to put it in my box. In my box, I had $40 remaining. Okay. So the $460 plus the 40 is going to give me $500. When you replenish, every time you replenish, you always have to go back to the original petty cash balance. In this case, my petty cash is $500. So every replenishment needs to bring you back to the original petty cash balance. Okay. So that is how we do these entries. So I just did this here for illustration. That way we can figure out our difference, whether we were short or over. And then these are the entries that need to happen. Okay. So now, last but not least, you're going to have a problem dealing with bank reconciliation and entries. Now, this is a super important problem because you're going to have something similar to this on your test. Okay. So it's very important that you know how to do a bank reconciliation. Okay, so I'm taking the time to explain it to you. That way you have very good understanding of how to do it. You have an example here, and then you can be able to complete it and be ready for when you have your test. Okay, so this one is a little bit longer. It says, the cash account for Paula Medical Company at June 30th indicates a balance of $166,436. The bank statement indicates a balance of $195,688 on June 30th. Comparing the bank statement and the accompanied canceled checks and memos with records revealed the following reconciling items. And then we have reconciling items A through F. And we'll go through these one by one in a bit. Okay. The instructions. Requirement 1. Prepare a bank reconciliation. That is what we're going to do first. We're going to prepare a bank reconciliation. Okay. Okay. So, when we prepare a bank reconciliation, what we're doing is we're trying to figure out what is causing the difference between the balance in my books and the balance in the bank statement. Okay, why do my records not match? Okay, so usually there's differences because of timing. Let's say, for example, you go and you make a deposit at a bank. Depending on the different banks that you go to, they have different cutoff times. So let's say, for example, you go on a Friday to make a deposit at 4:55 p.m. Okay, the bank's cutoff was 3 p.m. So that means that everything that you make after 3 p.m. will not be available till the next business day, which would be Monday. Okay, so there's a timing difference. The bank is not going to show it in their books till Monday. You are going to update your books today because this is when you made the deposit and you have your little receipts to prove that. Okay, so there's going to be a difference because you're going to record it on Friday. The bank is going to record it on Monday. So there's a difference there. There could also be a difference. Maybe you issued out a check. Now, I know nowadays we don't use checks a lot, but we still do. So let's say, for example, I write out a check and I put it in the mail. Okay, and I'm in the accounting department. Okay, so I wrote a check and I put it in the mail and I update my records. Okay, I send check number 123 in the post office to pay for the electricity. Okay, $300. Okay, in my books I'm going to write that I issued check number 123 for $300 and I'm going to deduct it from my balance. But guess what? That check needs to travel, a couple of days to get to its destination. Then I need to process that check. Then that check needs to clear the bank. So it takes about 5 to 6 days for the check to clear the bank. Okay? So during those 5-6 days, the company is showing one balance and the bank is showing another. Why? Because that check hasn't cleared the bank yet we are showing it on our books that we mailed out a check to pay for our electricity. Okay? There could be other situations where maybe the bank makes a mistake, which it happens. I used to work in banks and mistakes are done. This computer or the system picks up an incorrect figure. It reads something incorrectly. Errors can happen. Or we in the company, at the company level, can make a mistake and record a transaction for an incorrect amount. So adjustments need to be made. Okay, so there's just a wealth of information about bank reconciliations provided to you in the textbook. Please read over that section carefully. So now we need to make sure that we figure out what is causing our differences at the bank level and at the books level, and then come up with a adjusted balance for both, which should balance, taking into account all of the different factors, and that is the balance that we should be working off of. Okay, so let's start with the reconciliation. Usually we have the name of the business. In this case is Paula Medical Company. This is a bank reconciliation and we're doing it as of June the 30th. Okay, so there's two sections on a bank reconciliation. We have the bank section on top, and then we have our information based on our company records at the bottom. Okay, so we always begin with the cash balance according to the bank statement. Okay, and I misspelled statement. There we go. So the cash balance according to the cash balance according to the bank statement. So according to the bank statement, okay, let's see. According to the bank statement, indicated a balance of $195,168. Okay, I'm getting that number from right there. Okay, so that's going to be my starting point, $195,688. Okay. Then I'm going to skip a couple of lines and I'm going to do my cash balance. Let me see how many lines I need. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5. Okay, so I think up here I would be fine. So now I'm going to get my cash balance according to company's records. This is what we, the business, are showing on our end. This is what the bank is showing on their end. This is what we are showing on our end. And the balance that we have is $166,436. Okay. So that is the balance per our records, $166,436. Okay. That is our starting point. Okay. Then we're going to have a section for our additions, anything that needs to be added. And then we're going to have a section for our deductions. Okay. The same thing over here. We're going to have a section for our additions, and then we're going to have a section for our deductions. Okay. Okay. So that's how it should kind of look, and then we'll go from there based if I need to make any changes. Okay. So let's go through each of the items. Okay. So it says checks outstanding total $19,427. Okay. So what does that mean? Checks outstanding total $19,427. So what that means is that we, the company, issued out a whole bunch of checks, but they haven't cleared the bank yet. Okay. So in my records, I've already included them here, but the bank has not included them because the bank is unaware of them because it hasn't cleared the bank yet. Okay. So because the bank has not deducted those checks, then I need to make an adjustment to my bank balance. You know what? To show, I'm still missing $19,427 of outstanding checks. So when those check clears, what's going to happen to your balance? We're going to deduct those checks from your balance, right? So here, I'm going to go ahead and I'm going to put outstanding checks. So we are going to update, or we're going to adjust our bank balance by our outstanding checks, okay? And these are outstanding checks, so that means that when these checks clear, my balance is going to be deducted. So I'm going to put a minus sign, and that's $19,427. Okay. So outstanding checks go on the bank statement section in minus because those are checks pending to clear the bank. Letter B. A deposit of $12,300 representing receipts of June 30th has been made too late to appear on the bank statement. So we made a deposit, but the bank has not recorded it yet because it was after the cutoff period. So in our company's records, we have already recorded the deposit, but the bank is pending to record it on their end because they still haven't processed that deposit. Okay, so what's going to happen? Well, what happens when you make a deposit? Does your cash balance go up or down? Okay, when I make a deposit, my cash balance goes up. So I'm going to add my deposit in transit. Okay, and this is a deposit in transit as of June the 30th. Okay, so I'm going to add it because once that deposit clears, I'm going to add that to my total cash balance in the bank. Okay, so that is requirement B. Deposits in transit are added to the bank section part of the reconciliation. Okay, now letter C. The bank collected $26,500 on a note. Okay, it's $25,000 for the note and then $1,500 for interest. Okay, so the bank collected money on behalf of the company. So the bank is already showing the deposit of $26,500. Now, we, the company, are not aware that this deposit has been made, that the bank has collected these $26,500. We are just finding out about it today, that we are looking at our bank reconciliation or our bank statement, and we see on our bank statement a $26,500 deposit. Okay, so we, the business, we, the company, have not recorded that entry. So now we need to record that entry. Okay, so this is money that we received. It's our money. So because it's our money, I need to add that to my company's records because I don't have that deposit showing on my company's records yet because I didn't know about it until I got my bank statement. So I'm going to add that deposit. Okay. Note collected by bank. Okay. Including $1,500 interest, and then it was how much for the note? It was $25,000 for the note. Okay, and let me wrap text that one. Okay, so we received $26,500. Okay, that's going to be added, so that's going to be positive. Okay, my balance is going to increase. I am adding. Let me bold this, that way we know what it is. Bold. Okay, so I am adding, and then these are my deductions. Deductions are subtracted. Okay, and I'll wait to do that. Just give me a minute here. Okay, there we go. Oh, I've missed the S. There we go. Okay, so that note collected, the bank was already showing it on their end. It appeared on their bank statement, but we hadn't included it. So now we need to add that deposit to the company's records. Okay, that is letter C. Letter D. A check for $4,000 returned with the statement had been incorrectly recorded by Paula Medical as $400. The check was for the payment of an obligation to Skyline Supply Company for a purchase on account. So we issued out a check for $4,000. Okay, the check cleared the bank for $4,000, but we on our end on the company's record, instead of recording it for $4,000, we made a mistake and we recorded it only for $400. So now that I'm looking at my bank statement, my check does not tie to what I have on my books. So then I figure out, oh, I made a mistake. I recorded it for 400 in our books when it should have been for 4,000. I'm finding out about it today, so I need to make an adjustment for that, okay? So you should have recorded the check for 4,000. You only recorded it for 400. So that means that you only withdrew $400 from the account. So if the check should have been for 4,000 and you recorded it for 400, you need to have an adjustment of $3,600. Okay? So that adjustment is going to be a deduction. Okay? And that is going to be error in recording the check. Okay? Now that error is for $3,600. Okay? The 4,000 minus the 400 will give you the difference of $3,600. I need to do another entry to my books for $3,600. That way the $3,600 plus the 400 entry I had done gives me my $4,000 amount for my check. Okay? So that is letter D. Letter E. A check drawn for $195 has been erroneously charged by the bank as $915. Okay? So the bank made a transposing error. They recorded the check for $915 when it should have been for $195, and this is a bank error. Okay? So you figure this error out. You identify, hey, I look at my check, it's written out for $195, yet the bank took away $915 from my bank account. So what do you do in that case? Well, you, the company, does not have access to updating the bank records. What you need to do is you're going to pick up the phone, call your bank representative and say, hey, I'm looking at my bank statement. I just received it on the mail, and check number 1234 is showing for $915. But if you pull up the image, that check was written out for $195. The bank made a mistake, and I need for the bank to fix it. Okay? You need to notify the bank so they can make the processing entry for the adjustment. You cannot fix it yourself. Okay, that's not an entry you can do to fix because you don't have access to the bank's books. So, for now, we need to make sure that we account for that in our reconciliation. Okay? So, what's going to happen when the bank makes the adjustment? Well, the bank took out too much money from your bank account. Let's get the calculator. So, the bank took out $915 from your bank, and they should have only taken out $195. So what's going to happen? The bank is going to deposit back into your account $720. Okay, so there's going to be a deposit. So a deposit is an addition. So we're going to go ahead and we're going to do bank error in charging check as $915 instead of $195. Okay. So this is a bank error in charging a check as $915 instead of $195, and that results in a deposit of $720. Okay. Now, last but not least, we have a bank service charge for June for $55. So if you have bank accounts, you know that you get charged a whole bunch of fees. In this particular case, we are being charged $55 of bank service charges for the month. Okay. So now the bank has already taken those $55 from your account, but you, the company, were not aware of that transaction posted until you get your bank statement. So now you need to do an entry in your books to account for $55. Okay. So if you're paying the bank for fees, what's going to happen? Are you going to add money or are you going to deduct money to your account? So if you're paying for $55 to the bank for the bank service charge, then you should have a deduction. Okay. And we're going to have a deduction for bank service charges. Okay. And my bank service charges are $55. Okay. So those are all of the transactions that we have. Now I'm going to go back and I'm going to balance my reconciliation. Okay. So here I have my beginning cash according to the banks, $195.68. Then I have two additions. So I'm going to add those together. So I'm going to have my total additions. So my total additions are going to be, you add those two numbers together, it'll be 13,020. Okay. Then we have one deduction, which is our outstanding checks. It was multiple checks, not one. Outstanding checks of 19,427. Okay. So now I can get my adjusted balance. That is what I'm looking for, my adjusted balance. After these adjustments, this is how much cash I should have in my bank. Okay, and what are we going to do? We're going to get our beginning balance plus our additions minus our deductions. Okay, and that's going to give me 189,281. Okay, 195.68. Let me get a calculator so I can show you here instead of just doing it there on Excel. It'll be 195,688. I'm sorry, I put the wrong 195,688 plus your additions of 1320. That gives you 208,708 minus the 19,427 deductions. That's going to give you 189,281. Okay, so that is your adjusted balance on the bank statement. Now we're going to go down to our company's records. Okay, so I started off with 166,436. Okay, I added that note that we collected, or the bank collected on our behalf, for 26,500. Okay, and then I'm going to deduct my deductions. I have two deductions. I'm going to add those together. So I'm going to have my total deductions. And you only get totals if you have more than one transaction. Okay, so my total deductions are going to be the 3,600 plus the 555. Now, because these are deductions, I'm going to put them in minus. Okay, deductions always have parentheses or in minus. Okay, so my deductions were 3,600. Okay, let me see. So it will be 3,600. Let me just get a calculator. 3,600 plus 55. That's 3,655. Okay, and because it's a deduction, we need to put it in parentheses. So you add these two and you bring it over here. Because it's your total deductions, you're going to put it in minus sign because it's a deduction from your balance. Okay, now I can figure out my adjusted balance for my books, for the company's records. So what we're going to do is we're going to get the beginning balance, which was 166,436, plus the addition, which was that note that the bank collected on our behalf, minus our total deductions, and that's going to give me 189,281. Okay, so let's run those numbers through the calculator just to see what we did. So we got the 166,436 plus the 26,500. That gives me 192,936, and then minus the 3,655. That gives me 189,281. When you do a reconciliation, your adjusted balance for the bank needs to equal the adjusted balance for the company's records. So if you see here, it's the same number. If your numbers do not tie, then you make a mistake somewhere, and you need to go back and figure out what that mistake is and fix it. Your adjusted balance for both the bank and the books needs to tie, be the same amount. Okay, so that is the first requirement. Prepare a bank reconciliation. Now the second requirement is journalize the necessary entries. Okay, when we record our entries, the only entries that we can record are the entries or the adjustments in our books. Okay, that's going to be the 26,500 transaction here. We need to record that, and then we also need to record our deduction transactions over here. Okay, So we're going to have a total of 3 adjusting entries. These 3 entries we need to record an adjustment for. Adjustments are only done for any additions or deductions on the company's records. Be very careful. You only record adjustments on anything that you had on the company's records. You never adjust the bank. You don't have access to the bank records. That, if an adjustment needs to be made, you need to contact the bank so they can make the adjustment for you. Okay? So adjustments are only done for any additions or deductions on the company's records. So we're going to get started. And this is happening as of June the 30th. Okay? Okay, so the first transaction we have here is the note collected by the bank, $1,500 interest, and I misspelled interest, guys, sorry. There we go. It's $1,500 interest and $25,000 for the note. Okay, so we need to record that in our books. Okay, so how much cash did we receive? Well, we received $26,500. Okay, what was that cash for? Okay, oh my God. Okay. So the first question is, what did you receive? Well, we received cash of $26,500. What was that cash for? Well, that cash was for a note. So we probably have in our system a notes receivable. Someone owes us money and they're going to be making us a payment every month of $25,000. Now, on your notes receivable, you only put the amount of the actual note. Okay? Now, you received $25,000 for the note, and then you earned interest. So you're going to have interest revenue of $1,500. Okay? It's very important that you break out the principal and the interest. Okay? So it's a $25,000 principal payment and $1,500 interest revenue that you generated out of that note. Okay, and what did you receive? Well, we received cash. So that takes care of that transaction right there. My cash is increasing. I'm adding, so my cash is going up because for that dollar amount. Okay, now we have our deductions. This is money that's going to reduce our cash. It says error in recording a check. Remember that check that we recorded for $400 instead of $4,000? Now I'm making the adjustment for the difference of $3,600. Now, what was that check for? Okay, it says that that check was for the payment of an obligation to Skyline Supply Company. So we were making a payment to Skyline Supply Company because we owed them money on a prior purchase. Okay, so that's very important because that's going to tell us what account we need to use. Okay, so what's going to happen on the 30th, on June 30th? Okay, I'm going to go ahead and I'm going to debit my accounts payable to reflect that I am making a payment to Skyline Supply Company. And the difference is $3,600. Okay. And then, okay, I also had, so that's going to be my first entry for that $3,600 deduction. I also have this $55 bank service charge. Now, in this textbook, they are using the account miscellaneous expense to account for bank service charges. In most businesses, we have an account called bank service charge expense. That way we can keep track of the bank service charges separately. Okay, so it's a good idea to have or to keep track of all of your expenses separately. But for whatever reason, they're asking us here to use the miscellaneous expense account. Okay, for $55. So we're going to go with whatever the publisher in this textbook is deciding. Just know that if you are working out there in a company, more than likely you will have an account called bank service charge expense to keep track of all of those expenses. Okay, but in this case, we're going to have an account miscellaneous expense for $55. Okay, so that is going to account for that bank service charge of $55. Okay, now what's going to happen to your cash after these two transactions get posted? Well, your cash is going to decrease. Why? Because you made that adjustment. Remember, these are deductions. So when they're deductions, we decrease our cash. And how do we decrease cash? We decrease cash by crediting it. Okay? So I'm going to have an entry to my cash account for $36.55. Okay? And then I'm just going to make sure that all of my debits equal my credits because I want to make sure that I'm in balance. Remember, debits must always equal credits, and they do. Okay? So that's just for my comfort, knowing, you know what, these entries up here are good, and I balance down here, and that's just for me knowing that my debits equal my credits. Okay? So that is requirement 2. Requirement 3. If a balance sheet were prepared for Paula Medical Company on June the 30th, what amount should be recorded as cash? Okay? So the amount that should be reported, the amount that should be reported in the cash account should be the $189,281. Okay? The adjusted balance from the reconciliation. Okay? So the amount that should be reported in the cash account should be the $189,281, which is the adjusted balance on our reconciliation. So we're making all of these adjustments to figure out how much cash do we actually have. And in our balance sheet, we should be reporting the actual cash that we have, which is the $189,281. Okay? So this is the third requirement. This problem, please, when you're doing it for homework, please pay extra attention. You are going to see that problem on your test. Okay? Please, if after you complete your assignment or while you're working on your assignments, you have any questions, please do not hesitate to contact me. Please refer to your syllabus for my available office hours, or you can always send me either an email or a Blackboard message. If you are sending me an email, please ensure that you include what course you're in. That way I know, okay, what class you're talking about, and I know where to go back and provide you the necessary guidance. So that is basically the problems that I'm going to go over with you. They're not all of your problems in your homework, but there's some. I'll let you apply what you've learned in the chapter on your own on the rest of the problems. Remember that Cengage does have some short show me how videos that you can use as well. So that is basically it. Please stay safe, and until next time.